Hello everyone, good morning and welcome to this educational presentation on a Saturday. Now today I'd like to talk to you about a strategy that I've actually been trading for over 43 years. In fact, I actually traded this strategy yesterday in yesterday's trading. And what it's based on is something that I learned some over 4 decades ago actually on the trading floor of the Pacific Stock Exchange. That's where I first started my career in trading. And here's what my mentors taught me. They said, Steve, the market is always giving you a clue as to which direction it wants to go. Now that's the reason why I trade this strategy, because many times it will generate signals even when it looks as if the market is doing nothing, going sideways. But the point is that we're always taught to do the opposite of what the market is doing. I mean, I know when I was first taught, if the market was going straight down, I was taught to buy, right? Because you want to buy low and sell high. And if it was going straight up, I wanted to sell and short because it was too high, it was overbought. But this is what really leads to inconsistent trading, because we really want to be in sync with what the market is doing. The only trouble is we're always taught the opposite. And then when we finally get on board and want to be in sync with the market, we really don't know what to listen to. We listen to some convoluted indicator that's not based on anything we really understand. We listen to some guy in a chat room or in a trading room, or we listen to someone on TV tell us what they think the market is doing. Well, today I'm going to share with you and review what we learned last week and go over the things that lead into the strategy that I've actually been trading for over 4 decades now. And you'll see how simple it is to apply this strategy on our platform. I developed this with Pro Trader Strategies with one goal in mind: to simply teach traders how to trade. So welcome to this Saturday educational presentation. My name is Stephen Primo, President and Founder of Specialist Trading. As you just heard, I started my career on the floor of the stock exchange. I began in 1977. I was on the floor for a total of 16 years. 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist is someone who made markets in roughly about 50 or 60 stocks. So that's what I did. Some of the stocks I made markets in were US Air, Waste Management, IBM, Beverly Industries, a lot of different stocks. Maybe some are still around, some are not that much anymore. But I traded and made markets in the crash of 87 and the market that followed afterwards. So I've seen and been around different environments, different strategies and systems. I've traded them all. So that's why we formulated specialist trading. About 12 years ago, I teamed up with Pro Trader Strategies with one goal, and that was simply to teach traders how to trade, because most traders are relying on someone or something else to tell them how to trade. And what they usually do is just simply and blindly, in my opinion, follow what someone else is doing. I mean, think of it. That's how the entire industry is based upon you going to a website or subscribing to some, blog or some, trading room where they tell you what they like and don't like on a daily basis. Now, this, in my opinion, is the reason why most traders fail, is because you're giving your power away. The only way I have seen traders really last and really stay long enough to trade for decades is by making their own decisions. And so the way you make your own decisions is not by going to a chat room or trading room or watching some guy on TV or waiting for the earnings reports. That's not how you make your own decisions. How you make your own decisions is learning how to listen to the market, trusting in what the market is telling you, and then just jumping on board. So that's our philosophy at Specialist Trading. And you'll see that today and how simple it is to really learn how to listen to the market. So this is going to be a great educational presentation today, but before we begin, as always, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results in today's presentation, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. So if you're looking for more education on a daily basis, I invite each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down, because I post things on a daily basis, anywhere from little bits of financial wisdom to signals our strategies have generated. Lots of different ways to kind of learn our approach and our concepts on our Twitter page. So please feel free to follow us on Twitter. Now remember, we are a little bit different from other webinars you may have attended. I always get this question from students, usually at the end of our presentations, someone saying, Steve, what do you think of this stock? Or what do you think the market's going to do next week? If you've come here thinking that that's what we're going to talk about today, you've really come to the wrong place. Once again, that just promotes that same type of mindset where you basically are going to follow what someone else thinks is going to happen in the market or a stock. Remember, you have to get away from that mindset of asking people. We always tell our students the worst question and the number one question you should never ask anyone is, what do you think of the market? Or what do you think of some stock? Because when you do that, you're basically telling, the markets, I don't know what to do. Why don't you tell me what to do? And that is why most traders fail. The only way you can become a consistent trader is by making your own trading decisions. So if you come here today thinking I'm going to tell you what I think the market's going to do next week or what I think the perfect stock is or the perfect time frame, you've really come to the wrong place because we don't believe in that. In fact, we actually believe that that's what makes traders fail. So why would we want to promote that type of mindset? So once again, our goal is not to force feed you signals, not to tell you what we think of the markets. It's simply to teach you how to trade with the specialist edge. My mentors taught me the same edge some 4 decades ago, and I believe it's been able to sustain me for that amount of time. So hopefully it will be able to do the same for you. This is going to be an educational classroom today since we are an educational company, but I want you to ask me as many questions as possible. But as always, we reserve the last 10 or 15 minutes for questions. So if you have a question, if you're new to my webinars, please hold off on asking for every slide. We don't want to take all of your Saturday morning, okay? So if you have a question, we'll take it at the very end of the class. The only question I will answer is this, and is this being recorded? Yes, it is. So if you have to leave early or you're having technical issues, we're going to send each and every one of you a link to this recording, okay? All right, with that stated, let's review what we covered last week, because this is an offshoot of what we covered in last Saturday's presentation, where I talked about 2 really important techniques that can help sustain you. And you're going to see how these 2 techniques actually make up the beginning requirements to the strategy I've been trading for over 43 years. Okay, so if you weren't here last Saturday, or if you weren't able to watch the recording, let's just review. There were 2 techniques that I specifically talked about that you can add to your current trading plan, or you can build a strategy based off of them, or simply research them. And I'm sure you'll see their addition to your strategy can increase your chances for consistency tremendously, okay? Technique number 1, the price must be above the 50-period simple moving average. If price, I should say, is above the 50-period simple moving average, this means that the overall trend is up, okay? So conversely, if price is below the 50-period simple moving average, this means that the overall trend is down. Now see, this is what goes back to what I stated in the opening statements. We want to listen to the market, but we're always listening to some guy in a chat room or some guy on TV. If you listen to the market, it tells you just about everything you need to know. So the first thing we do is add a 50-period moving average. If price is above, the market is telling us, not me, not some earnings report, not some jobless claim. The market is telling me the overall trend is up. If price is below the 50, the overall trend is down. Once again, we look at this generic chart here. Most people would say, well, Steve, the earnings are coming out next week, so there's really no trend. We're just kind of going sideways until that news comes out, right? This is the way we're all taught to trade, right? Well, not really, because if we add the 50-period moving average, we ask ourselves, where is price in relation to that? Price is above. So then what is the market telling us? It's not saying there's no trend. It's saying the overall trend is up, okay? You see how simple this is? It doesn't matter if this were a 5-minute chart, a monthly chart, or a weekly chart. It makes no difference if this is a stock, a currency pair, or Bitcoin. It can be applied to all markets and all time frames. Conversely, we look at this and we say, well, Steve, this is a range sideways market. I'm going to kind of stay out of this until there's a breakout, either to the upside or to the downside, right? No trend at all. Not true. You add the 50-period moving average. Ask yourself, where is price in relation to that? Price is below. So what is the market telling you? It's saying the overall trend is down. You see how simple this is? This is the first technique that my mentors taught me, and this is the simplest thing to apply. It doesn't cost any money. You can start doing it right now. Now we want to apply technique number 2, which has to deal with the short-term trend. I know a lot of traders like to say, well, Steve, I was always taught if I'm going to trade a 5-minute time frame, that means I have to see what the hourly time frame is. And so I see if the hourly time frame is down, then the 5-minute time frame has to be down. That will add to my consistency, right? Or if I'm trading a daily bar, I have to see what the overall trend is of the weekly bar. Well, I get that question almost on a daily basis. And listen, you are always free to use whatever you want. Excuse me. As an educational company, we don't tell traders what not to do. We're only teaching you things that have stood the test of time. And in my opinion, I was taught that same technique some 4 decades ago, and I have never found any consistency in using 2 different time frames to determine the trend. So, once again, it's up to you, but in my opinion, that's just an urban myth. It really doesn't work. So how do we get the shorter term time frame in sync with the overall trend? Here's where we apply technique number 2. When a bar closes in the top 25% of its range, the market once again is saying, I want to go higher on the short-term trend. Now, conversely, when a bar closes in the bottom 25% of its range, the market is saying, I want to go lower on the short term. So this is how we find the short-term trend. We don't have to look at a different time frame. We can look at the same chart. We have our 50-period moving average applied. There's no reason to overcomplicate things. So let's look at this generic bar here. This is the way you find out if we close in the top or bottom 25%. Let's say we are above the 50-period moving average, okay? And we see a bar like this. Doesn't matter if it's a 5-minute bar or a monthly bar. What you want to do is divide by 4 separate equal parts. If you close in that top quarter, what is the market telling you? Not me, the market. The market wants to go higher on the short term. So now, if price is above the 50, that's the overall longer term, and you have a bar closing in the top 25% on the shorter term, you have the 2 time frames in sync. There's no reason to overlap with different time frames. There's no reason to do that. Same thing as we look here on this generic chart here. We have a bar closing in the top 25%, and we went up for the next 5 or 6 bars. Then someone would say, but yeah, Steve, look at what happened here. Well, remember, we're looking at overall consistency. And here we have another bar in the top 25%. And look what happened after that. So you see, these are just techniques. They're not strategies to build off of and trade off of. They're just guideposts to get you in sync with what the market wants to do. We can do that to the downside as well. It makes no difference if this is a currency pair, if this is a commodity, if it's soybeans. It makes no difference if it's a 5-minute time frame or a tick bar. But you want to divide by 4 separate equal parts. And if you close in that bottom 25%, what are not the earnings telling you? What are not the jobless claims telling you? What is the market telling you? On the short term, the market wants to go lower. So you combine this with the overall trend, and you have a high probability for consistency. Looking at this generic chart, once again, we are below the 50, so the overall trend is down. We have a bar here closing in the bottom 25%, so the short-term range is down. So you have that consistency now. Look what happened, all right? There's no reason to look at news. There's no reason to go to a chat room. There's no reason to subscribe to some guy who's going to tell you what to buy or sell on a nightly basis. You're listening to the market for the very first time, and it's a lot simpler. It's a lot more cut and dry. You don't have to figure out, well, are those good earnings, or is this really support and resistance, or is this really a Fibonacci retracement? There's nothing you have to do there. Those things have no levels of consistency because they're too subjective. This is just cut and dry. You're either going to close below or above the 50 period. You're either going to close in the bottom or top 25%. It's that simple. Now, these 2 techniques make up the preliminary rules to the strategy that I've been trading for 43 years. This was the first strategy my mentors taught me when I was struggling, and we call it strategy number 4. You've heard me talk about it before. I use this in some capacity on a daily basis with my trading. Let's talk about some of the highlights. It's designed for traders looking to catch momentum. I always tell my students, when I first learned this strategy some 4 decades ago, I used to trade it on 1-minute bars because I'd be getting in and out of trades on the floor in virtually a minute or 2. But you can basically use it for any time frame and any market, any direction. So it makes no difference if you're looking to catch momentum on a weekly chart or on a daily chart. Now, it's a pattern recognition strategy. We're looking for a specific pattern that appears over and over and over again in any market and in any time frame. Now, it only uses one indicator. You already know what that is. It's the 50-period moving average because we're looking for a specific pattern. Now, one of the rules of that pattern is the top-bottom 25% rule. So you've already learned 2 of the rules of this strategy. There are only 4 rules altogether. You've already learned the first rule, which is to apply the 50-period moving average to tell you if you're a buyer or a seller. And then the second rule, to apply the top-bottom 25% bar. That's part of the pattern. Now, the remaining parts I can't divulge. That wouldn't be fair to the students around the world. We have students trading this in over 115 countries and in every state in the United States. It wouldn't be fair for me to give you all the rules, but I've given you half of the rules to the strategy. So you can go out and start testing this yourself. Now, the advantages of trading strategy 4 is that it's extremely consistent. Now, I know a lot of you, I always say this, a lot of you think that extremely consistent means, well Steve, means that it hardly ever loses, right? It's like almost every trade is a winner. That's not what consistency means. Consistency actually is an awareness that you will have losses from time to time. That's okay. In fact, yesterday I was trading this method in the E-mini futures. I had 2 trades only yesterday. The first trade was a winner. The second trade was a loser. But at the end of the day, I still made money. So that's what consistency means. It's an awareness that you will have losses. Many times, though, you're able to recoup those losses or at least make more than what your loss was. So that's what we mean by consistency, a 2-step forward, 1-step back approach. Now, strategy number 4 also makes you a part of the process. Remember, we said that the reason why most traders fail is because they're not a part of the process. They're basically taking themselves out of the game by going to a chat room or watching some guy on TV tell them what they think of the market. I mean, I talk to our new students all the time, and I ask them, I say, how did you originally make your trading decisions? I said, well, I subscribed to that blog, or I bought this $10,000 system that spit out the buy and sell signals. And I said, in any part of that process, did you make the decision about buying or selling? And they would say, no, I just kind of, did the research. And I said, well, what is the research? I said, well, I just listened on TV to what people were talking about or went online and what the stocks were. That's how I figured out those are the ones I guess I want to trade. Once again, every justification for trading was based off of what someone or something else was doing. This is why most traders fail. Myself included. When I first started, I did those same things 4 decades ago. And as I often say, if they didn't work for me 4 decades ago, why would you think they're going to start miraculously working now? They're not, because they're not rooted in consistency. Remember, this strategy is designed to be as simple as possible because we want you to be a part of the process. You have to make your own trading decisions. All right, so let's go forward and let's look at some recent examples, okay? I'm going to show you a lot of examples. Remember, I cannot give you all the rules. I know a lot of you are going to say, well, Steve, where would I exit? Where would I place my stop? How exactly do I enter? Those are part of the pattern, and I can't really divulge that. But I can share with you these 2 techniques that make up the half of the rules to the strategy. You'll see them in every setup. Okay, remember, everything you're going to be seeing right now comes from a display on the PTS Primo chart. I designed this with Pro Trader Strategies with one goal in mind, to teach traders how to trade. And you'll see how simple it is to become a part of the process. Even though everything is one click away, getting access to the signals, getting access to the indicators, we teach you in our online courses what to look for. Let me show you what I mean here. Here's an example of MARA, M-A-R-A, okay? Marathon Patent Group. Now, here's the way most traders, myself included, would analyze this. They say, well, Steve, I make my own analysis. I've been watching this based off my own research. I'm not listening to anyone else. And, I read those books on technical analysis, and this is the perfect definition of a downtrend. We have lower highs, lower lows, as you see here. Here's a high. Here's the next high. It's lower. Here's the next one. The lows are lower. So we're in a downtrend. So I'm looking either to short this or I'm going to stay away. Once again, there's so many things that are rooted in inconsistency. This is what I'm here to teach you. The first thing is we apply what we call the buy-sell line, which is simply the 50-period moving average. Here's how you do it on our platform. Remember, this is all taught in the course, but we make it simple on our educational tool, which is the PTS Primo Charting Platform. So we're trading strategy 4. We go up to the green strategy tab center here. This is where all our strategies and techniques are, and we scroll over to strategy number 4. See that? What you do is click it on, and the first thing you want to do is click on the indicator, which is the 50-period moving average. Click that on, and you'll see the 50-period moving average appear. Now, once again, going back to that first technique rule, where is price in relation to the 50-period moving average? It's above. So the overall trend is what? It's up, right, correct. So are we going to be selling if the overall trend is up? Absolutely not. We only are trading in sync with the market. Remember, we want to listen to what the market does and then jump on board. So the overall trend is telling us, even though we've been going down lately, this is a buying opportunity. We're not going to be selling into this. We're going to be looking to buy. Now, rule number 2 is we want to look for those bars that close in the top 25% of their range. So we go down the list here, and we don't really find any until right here. Okay? Now, on top of that, you know the 2 remaining rules left of the strategy. So you think you have found and identified, properly identified, a valid strategy number 4 signal. So here's why we created the PTS Primo Charting Platform, as an educational tool to check your work. So let's say you think there's a valid signal here, but you don't have me sitting next to you to tell you that, yeah, that's correct. You're learning how to spot them. So what you do is you go back to the green strategy tab, click on strategy number 4. In the drop-down menu, you click on the signal arrows. The signal arrows will verify if you've properly identified a valid signal at the right bar. And guess what? You did. This is valid, okay? You close in the top 25%, we're above the 50, and the remaining rules are met. So you could purchase this really inexpensive stock. You could have done this just last week, actually, and look what happened. 5 points in the next week. And I know a lot of you say, well, gosh, 5 points, that's not very much, Steve. I mean, you know, some of these stocks go up 20, 30 points. That's true, but remember, this is a $5 stock, and that was 100% gain in 1 week. I mean, what if you were trading Tesla? What if you were trading Google, and in 1 week, the price soared 100% of its value? It's all relative. So, you know, maybe you could buy 1 share of Google, but here you could buy maybe 5,000 shares of Morrow. Here's another example. GILD, Gilead Sciences, okay? Once again, here's the way I used to make these decisions. I always say, well, you know, I took that class on support and resistance, and I like to follow what the institutions are doing, and all the institutions are buying right here. So this is major support. That's where the support is. That's where the Fibonacci support is. And look, we're already starting to go up. So I'm a buyer of this, right? Every decision I just made was based off what someone or something else was doing, not based off what the market's telling me. So how do I find out what the market's telling me? First thing is click on strategy 4. We want to find out the overall trend. That's rule number 1. Click on the indicator. And then we ask ourselves, where is price in relation to that 50-period moving average, or what we call the buy-sell line? Is it above? Nope, it's below, right? So what is the overall trend? The market is telling you. I'm not telling you. The earnings aren't telling you. The jobless claims aren't telling you. What is the market telling you? It's telling you in this stock, the overall trend is down. So do we want to be a buyer? No, we want to be a seller. We want to always be in sync with the market. It's like, think of the market like a river. Would you rather swim upstream against the current and really, you know, you ultimately get to where you wanted to be, but you'd be exhausted? It wouldn't be a very pleasurable experience, right? Or would you rather just swim with the current at your back and just relax and have the nice flow of the water take you down the river? That's the way it is when you're in sync with the overall and the short-term trend. Okay, so when we see a rise in price, when price is below the 50-period moving average, this is not something to jump on board and buy. This is a selling opportunity. Now we look for rule number 2, bars that close in the bottom 25% of their range. And there are a number of them here. In order to check our work, we want to see which ones are valid. Click on strategy 4. Click on signal arrows. And remember, this is just as an educational tool. We don't want you using this to say, well, I don't really need to know the rules. You know, I'm going to use this like a system. I'm just going to have the platform spit out buy and sell signals for me. That goes entirely against our philosophy. You need to be a part of the process. This is only here ultimately for an educational tool, because where I eventually want you to get is the way I look at the charts. I don't even need these signals anymore. I know exactly where a strategy 4 buy or sell signal is just by looking at the chart. I don't need to have the arrows plotted on the screen. But until you're learning, until you get to that point, you're going to be using this as an educational tool. And guess what? You're right. There were a number of them, and you spotted all of them correctly. Now, let's say you had taken the very first signal back here on this rise where everyone thought we were buying. Well, 9 points coming into November. All right, let's look at some more here. Here's an example in VERU, another inexpensive healthcare stock, roughly trading about $2 or $3. Someone would say, well, Steve, this doesn't apply for these really inexpensive stocks, does it? Sure, it makes no difference what the price of the stock is. It makes no difference even if you're trading a different market or time frame. These rules are universal. You can transfer them onto anything. So we are above the 50. We have a bar here closing at the top 25%, and it meets all the rules. Now, I know a lot of you are saying, but Steve, there are a number of bars that close. Why aren't they buy signals? Because remember, there are still 2 more rules remaining. I cannot divulge what those are. It wouldn't be fair. And apparently these bars did not meet those requirements. But this one did. So on the 2nd day of December, you could have purchased this roughly about $3 and made 8 points in a couple of weeks. That's a couple of 100% in just a couple of weeks. Here's another example to the downside, an OSTK. A lot of people were loving this stock when it started to rise, saying, you got to buy this, you got to buy this. It just keeps going higher. But our students know that, well, we are below the 50-period moving average. This is not a buying opportunity. This is a selling opportunity. Had you bought along the way up here, look at how you would have given back all your profits the next couple of weeks. You have a lot more consistency being in sync with the overall trend. Another example in PayPal, okay? This is what we call a mini cluster because you have a couple of signals right together. Now, a lot of students tell us that they only trade when you have a mini cluster because this is a higher level of consistency. Since we're not a statistical company, I have no statistics to back that up, but a lot of students like to wait for a number of buy signals all bunched together, sometimes 5 or 6 altogether, all right? Here we only have 2, but they're both valid buy signals, and PayPal generated just last week, and the stock went up 25 points in 1 week, okay? We know this is an expensive stock, $200 stock. You could have bought calls or maybe a small odd lot. Remember, how you enter, as I always tell our students, is up to you. We're not going to tell you that, well, the way to enter is to buy this type of spread on the options. We don't believe in that. That's your decision. Some of our students only purchase calls. Others only buy the stock. That's out of our realm. We're not going to tell you that this is an option class or this is a stock only class. If I were teaching you how to play golf, which I have no idea how to play, but let's just say I were teaching you how to play golf, okay? I could teach you the fundamentals and the basics about the swing and your body movement and your hip movement, but I'm not going to tell you which golf clubs to buy. That's up to you. It's the same thing with trading. I'm going to teach you what to look for, how to identify a valid setup, but I'm not going to tell you that you can only buy options or you can only purchase a stock. That's up to you. The vehicle you choose to apply your trading to is entirely up to you. You must be a part of the process. Let's look at GLPG, Galapagos MV, another healthcare sector. Once again, we're below the 50-period moving average. Look at all the sell signals being generated, some better than others. But if you had taken this very first one up here, do you see on this nice bounce where everyone thought we were rallying, you saw that as a shorting opportunity, roughly at about 145. And look at the stock, 50 points lower coming into this last week in December. Now, so many students, this probably, since I don't follow news or events like that, this probably went down like this on some bad news or some bad announcement. And so many people are always shocked. They say, gosh, I wish I would have known it was going to be negative news. That way I would have gotten short, or that way I would have at least sold my shares. I wouldn't have got out of it. But remember, you don't need to have some advanced, information and have, some broker calling you up and telling you the news of what's going to be happening. It's all right there on the chart in front of you. The market tells you everything you need to know. Going back to October, where was price in relation to the 50-period moving average? Price has always been below. So you knew 2 months ago the overall trend was down. So why on earth would you buy something or hold on to a position if the overall trend is down? The market tells you. Why overcomplicate your trading? Just apply the 50-period moving average and say, listen, I'm not going to buy anything or hold on to a position if it's below the 50. I'll just wait till it gets back above. Your trading will increase its odds for consistency using that simple tool, and you can start doing that as early as Monday. Here's another example in RCKT, that's Rocket Pharmaceuticals. We're above the 50-period moving average. We have a valid buy signal right here, and coming into December, 33 points to the upside. Once again, probably some news announcement or something happened where the stock shot up. Someone would say, how did you guys know that? Were you following the inner workings of the company, or did you know about some announcement that was going to happen? Absolutely not. All we did was follow what the market was telling us. first of all, it's been above the 50-period moving average for weeks, so we know the overall trend is up. And secondly, we just use the prerequisites for the pattern that we're looking for, and they all met, and so the stock went up. The market told us. That's all we need to know. Let's look at some different markets and some different time frames. I just really do not want you to think that this only works for stocks, okay? Here's an example of last week in the E-mini futures. Here is a 15-minute chart of the E-mini futures, okay? Now, once again, nothing changes because we're looking at a different market or a different time frame. We are above the 50-period moving average. We're looking for bars that close in the top 25%. These two meet the remaining requirements. So you have another mini cluster of buy signals here. And as we can see what happened later on, 20 points to the upside. And if you miss those two signals, two more were generated along the way. Now 20 points, if you had one contract of the E-mini equals $1,000. So that's $1,000 if you held on for 24 hours. Okay, that's not a bad little setup, right? But once again, that's up to you how you decide to exit as well. We teach up to seven different ways to exit in our courses. So once again, you are in charge of your entries, your exits, and your stop placement. We just teach you all these different variables, almost like a smorgasbord or a buffet line. We have a buffet line of things that are going to really fill your belly and make you feel good, have a great dinner, but you decide which entree you have. You decide which drink you're going to have. You decide which salad or what's dessert. Everyone's going to pick something different, right? But at the end, everyone will be satisfied because these are very good meals. But not everyone is going to trade the exact same way, or I should say eat the exact same dinner. And that's the same way with trading. You should never trade the way someone else trades. You should never just blindly follow along what someone is spitting out in a blog or on TV. You should be given the opportunities and then make your own decisions. That's what we do at Specialist Trading. Here's an example in a 4-hour chart of the Canadian dollar. This was coming into December just a few weeks ago. We already have 3 valid signals generated. We're below the 50. Look what happened. Coming into last week in December, the currency pair fell 300 pips. That's over $3,000 in just about 3 or 4 weeks. So do you see how this works in any market and in any time frame? This is the strategy that I've been trading for now going on 44 years. So let's recap. Okay, remember, the first thing you want to do is always apply a 50-period moving average. I don't care if you trade 5-minute charts of the E-mini. I don't care if you trade monthly charts of stock. I don't care if you trade 4-hour charts of the Australian dollar. It makes no difference. Have a 50-period moving average applied. If price is above, the overall trend is up. If price is below, the overall trend is down. That's why we call it our buy-sell line, because it's automatically going to tell you whether you should have a buyer's mindset or a seller's mindset. Now, in order to find out if the short-term trend is in sync with the overall trend, look for a top-bottom 25% bar. This means if price is above the 50 period, look for those bars that close in the top 25%. If price is below, look for those bars that close in the bottom 25%. These are two extremely important techniques you can start adding to your current trading plan, and we strongly believe they will increase your odds for consistency. Now, these also make up the 2 requirements, the beginning requirements to strategy number 4, the strategy I've been trading for 43 years. I just showed you a lot of examples, and on top of that, we showed you how simple it is to apply and implement these strategies on the PTS Primo Charting Platform. We developed this and designed this to make trading simple. Remember, strategy number 4 can be applied to virtually any market, any time frame, and any direction. And you can do it with one-click access on the PTS Primo Charting Platform. It teaches you how to trade. So as we get ready to close here, I want you to ask yourself, do you think this strategy can help your trading starting in 2021? We know a lot of you struggled in 2020. We knew that a lot of you never realized the hopes and dreams you had at the beginning of 2020 to finish off the end of the year. Probably you never even got a third of the way where you thought you'd be. Maybe you even finished in the negative column. Why not start 2021 in the right direction? We have a great offer for you today, a great special Saturday offer, and a great discount as well. We're going to offer you strategy number 4, okay? This is our most consistent strategy to date. This is the strategy I've personally been trading. You're going to get instant course access, and you're going to be able to apply this on your own computer if you like. We'll give you the up and down arrows. You can apply this if you use TradeStation, if you use Metastock, MT4, Sierra Charts, NinjaTrader. But we're going to take it up a notch. We're going to also give you a completely different strategy to trade along with strategy 4. This is strategy 3A. This is a continuation method, completely and entirely different from strategy 4, which was a pattern method. A continuation method is one that looks for an already established trend and then looks for you to jump on board, either to the upside or to the downside. For example, let's look at this example here, this signal, or I should say, let's look at the highlights. Firstly, it's designed for traders looking to trade strong trending markets. Okay, remember those strategy number 4 signals? A lot of them, the market was just going sideways, but it was generating signals. Well, strategy 3A is different. It already looks for a strong trending market to jump on board. It's a trend continuation strategy, and it does this by applying a proprietary Bollinger Band setting. So let's look at an example here. Here's an old example in WEC, okay? Now right off the bat, a lot of traders would say, I don't want to buy this, Steve. Look at it. We're in an uptrend, and all my indicators and everything that I've learned says this is overbought. In fact, that chat room I go to says it's overbought. You don't want to buy this. You want to sell it. Well, sometimes it is a little bit too high. Sometimes stocks have gone up too high, too quickly, and they come back and pull back or rest. But there is a way to find out if there's still a little bit more gas left in the tank to the upside. And that's what strategy 3A does, because strategy 3A generated a buy signal right here at the very top, and it was still able to capture 10 more points in this stock, because that's its ability. It can find out these stocks that are going to continue in a strong trend. So it's entirely different from strategy number 4. We're going to throw in all the online rules and course for you as well to that. But we're not going to stop there. We also have some extra bonuses. In fact, a total of 7 Saturday bonuses. Bonus number 1, as we said earlier, you'll get the add-ons for both of these strategies, strategy 3A, strategy 4, that you can apply to TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, or our platform, a number of other different platforms as well, where you get the up and down arrows, okay? You'll also get bonus number 2. That's our Secret of a Stock Specialist. This is a 3-hour course of a conference I was speaking at some years ago in Denver, and it's been recorded, where I give a lot more techniques and different advantages to trading. This is a nearly $1,000 value. We're going to throw that in as well. Bonus number 3, you'll get a PDF version of my book. This is where I go into detail, almost on a trade-by-trade basis, of what it was like to trade during the crash of 1987. We're going to throw that in as a bonus. Bonus number 4, we take our Secrets course up a notch for a more advanced look at trading the markets. This is our Secrets 2.0 course, a nearly $1,000 value. Bonus number 5, 6, and 7 have to do with the PTS Primo Charting Platform. You're going to get usage along with scanning capability, either for individual strategy setups or for multiple strategy setups. But let me go over bonus number 5 here real quickly, because it's worth its weight in gold. You're going to get 6 months of the PTS Primo Charting Platform for free with delayed data, okay? This is a great, great offer. Let me show you exactly what you're going to get. 6 months normally would cost you close to $900. We're not going to charge you anything. Once again, you're going to get 6 months entirely free. So, as we stated, you're going to get one-click access to what I showed you today, how to spot and identify these signals on the PTS Primo Charting Platform for Strategy 4 along with Strategy 3A, plus 4 of the buy-sell line features. These are different ways to view the 50-period moving average. Our proprietary exit levels. This is one of our exiting methods. You'll be able, with one click, to find out where these exit levels are. Our signal scanner, as we said, you can scan on a nightly basis for signals, Strategy 4 or 3A. A strength of trend tool, a tool I developed with Pro Trader Strategies that has an uncanny ability to find out if a trend is running out of steam or not. This is another great tool, along with personalized tech support and a host of other techniques and methods that I have accumulated in 4 decades. This is all yours for 6 months, entirely free on the platform. So let's break this down, okay? Your Saturday discount, Strategy 4, Strategy 3A, 6 months of the platform along with the bonuses. Now, normally, if you purchased all this separately, it would cost you over $7,000, close to $7,100. Here's the discount we have for today. For a limited time only, we're only going to charge you $297, less than $300 for all of this, all these things that have taken me almost a lifetime to accumulate, okay? All yours, and that's over $6,800 savings. This is a great, great offer. Remember, you want to get your trading back on track. You owe it to yourself to take your trading to the next level. less than $300. That's why we specifically didn't want to charge you an arm and a leg and say, well, let's discount it down to $5,000, because we know it's the end of the year. We know you have expenses, and we think that everyone can afford this for less than $300, and it's yours to keep. After 6 months, you can decide for yourself if you want to continue usage with the platform, and I believe it's only $97 per month after that. But you still have 6 months to make that decision. But the strategies and all the things that you're going to be learning are yours to keep for a lifetime. You can't take that knowledge away from you. For less than $300, this is a great, great offer. So here's how to take advantage of this. Contact Pro Trader Strategies. I developed all the course information with them. They're in charge of all the tech support and pricing. I would suggest calling them up directly at area code 310-598-6677. They have trading consultants manning the phones now. They would be more than happy to answer any questions concerning tech support, or if you want to use your own platform, they can answer questions concerning that. I'm in charge of the teaching and the trading aspects of the company. They're in charge of the pricing as well as tech support. So any questions regarding that would be best to call them up or send them an email. There's absolutely no obligation. They would be more than happy to answer any questions. Or if you're ready to come on board, become a student, you can call them up right now and charge over the phone for $297, and you can be up and running as early as today. So this is really a great, great offer. Now, there's our link at the very bottom that will take you to the information page, and also if you'd like to sign up online as well. But that's not a live link, so if you look on the chat box, I have just posted, there it is, a live link to the sign-up page and the information page. So you can click that on in the chat box on the GoToWebinar call. So we just have a few more minutes left. I promised I would answer any questions you may have. So if you have any questions concerning what I went over today, or any of the techniques or strategy for, or the offer, type them in right now, and I will answer them to the best of my ability. I see someone is asking, can this be applied to Thinkorswim? Yes, it can. There are just a few small edits you need to make if you want to see the signals appear and get that information. But please remember, if you decide to use it on a different platform like TradeStation, or like, I would say, like, let's say NinjaTrader or Metastock, remember, you're not going to get all of the great other techniques and methods and setups that are offered on the platform. So we suggest in the beginning to just basically use the platform to get your information off of. And then once you see a signal or a setup, then just toggle back on to your regular platform to enter your order off of, okay? This is what the majority of our students do. They'll use the platform to get the signals, to learn, to educate themselves. And then once they see a setup, then they just toggle right back on to either, NinjaTrader, TradeStation, Metastock, and enter their orders. So that's probably how the majority of them do it. And then after 6 months, you can decide for yourself, okay? Someone was saying, can this work on commodities? Yes, it can. Probably one of the things we haven't seen in a long time, but when markets change direction and go south, which they haven't done in years, but when they finally and ultimately do, because eventually one day market will be in a strong downward downtrend. A lot of people don't like to hold on to stocks, even though our methods can be applied to down markets as well. They don't feel comfortable. They want to be involved in things that are more tangible, things that are more real. So they move over onto commodities. And our strategies and methods work tremendously on commodities. They work fine. So if you like to trade gold or soybeans or pork bellies, sure. We have some tremendous setups. I've showed them from time to time on our platform just how well they work. Someone is saying, where do I get the data for scanning? That's another great question. We provide that for you. So our platform has data for so many markets. Let's say you like to trade the Asian markets. We have data for that. Let's say you like to trade currency pairs, all the currency pair market. We have data for that. Let's say you like to trade just intraday futures or stocks, or let's say, like we said, commodities. We have all of that, even Bitcoin. So this is all yours. It comes with the 6 months of the platform. So every night you can scan for whatever market, and on top of that, you can scan for intraday markets. So let's say you're trading an hourly chart of a stock or a future currency pair. You can scan on an hourly basis for setups. But remember, we want you to know what you're scanning for. So since we are an educational company, you're going to learn exactly why a setup is there. You're just not going to be turning this into a system where you just blindly take the signals. You have to understand why a buy setup was generated or why a sell setup was generated, okay? Next question. Forex markets can be volatile. How well does it work on the Forex pairs? It works very well. We have tons of students using Strategy 4 on the Forex markets. I showed you that Canadian dollar, if you look at a lot of the Forex pairs, some of the best markets, let's see, the Australian dollar, the British pound have had these tremendous trends lately. This is perfect for either Strategy 3A or Strategy 4. This is what you want because we want to be in sync with the trend. When the Forex markets go into that choppy realm, well, sure, everything's going to have a little bit more difficulty, but because of the pattern, because of the way the pattern is designed, many times a signal will not be generated. So if it's choppy, that's the beauty of strategy number 4. Many times you will not get signals generated. But just to answer your question, yes, this works great on 4. I would venture to say that I would probably a third to possibly even half of our Strategy 4 traders are trading the Forex markets. So yeah, it works great. Good questions. Good questions. You're more than welcome. The one last thing someone is saying, you said correspondence. Let me just go back there and show you what we have here. Hate to backpedal here, but it says at the very bottom, yes, this is what I believe you're referring to. Educational correspondence. Yes, this does not mean another class you have to take or something. This actually means you get my personal email address. So if you are having trouble understanding the process, it's extremely simple, but that's okay. If you're new to this type of trading and you're having trouble or you just want to verify and check certain things, you'll get my personal email address. You can contact me whenever you'd like. I'm going to be answering emails as soon as we finish this presentation today. I'm answering some emails from our students around the world, and I will be there as soon as I can to answer them. A lot of our students, what they do is they take snapshots of certain setups while they're learning and say, Steve, here's where I think a valid setup was. I just want to confirm why wasn't this one or why is this one only? And I'll get back to them and explain why. And this is where you have the educational correspondence. So it's almost like having your own personal mentor there right alongside of you. So this also comes with the purchase, the $297 purchase, okay? Good questions. Okay, if there are no further questions, we are just about out of time. I just want to say thanks for taking time out of your Saturday. And trust me, this is a really great offer. I mean, as I said, it usually costs, if you purchase these things separately, we're talking over $7,000. But out of good faith to our students and to our new students that we are interested in teaching, we don't want to charge you something, especially at this time of the year, thousands of dollars. So we really want to show you our dedication to teaching you by giving you an inexpensive price. So less than $300 is, I'm sure some of you lost more than that just trading this past month. So for that same amount of money, you could have been having more than 4 decades of information that really is rooted in consistency that I use on a daily basis right there, right in front of you, one-click access. So take advantage of this, okay? And contact Pro Trader Strategies. All you have to do is give them a call, or I would suggest, if you want to email them, but I would suggest calling them at 310-598-6677, and they would be more than happy to answer any question you may have. Now, as we look one last time at our disclaimer, I just want to say thank you so much for attending today. I wish you the best of luck. Remember, take your trading to the next level. Start out 2021 in the right direction. I can help you with that. Have a great day, and we'll see you next time. Bye-bye.